Conversely, if current copper production can be maintained or if it can be increased, I think that you'll see increased byproduct flows in silver. So I think that what investors need to do is pay much more attention to funded investment plans in the copper business and the zinc business, and to a lesser degree in the gold business, in terms of forecasting silver supply. The other thing, I see the purchasing power of the US dollar declining for 10 years. And hence, I see the nominal price of gold increasing for 10 years. I say nominal because I refer to the US dollar quoted price of gold. I suspect, although I don't know, that the increase in the nominal price of gold will mirror to some extent the deterioration of the purchasing power of the US dollar price of gold. I was recently in London and I had occasion to be on Seville. And it's been said for my whole lifetime that an ounce of gold will buy you a very fine men's suit. Surprise, surprise. A men's suit, tailored men's suit on Savile Row is approximately $4,100 or $4,200 US. It wouldn't surprise me at all if that same suit 10 years from now was $12,000 or $15,000 US. It wouldn't surprise me if 10 years from now or so, the price of gold was 10,000 or 12,000 or $15,000 US. In other words, the price of gold will be no higher in terms of purchasing power, but it will maintain its purchasing power. Well, the US dollar will decline in purchasing power. If past is prologue, Patrick, and I can't guarantee this, but if past is prologue, there has come a time in every prior bull market where when the generalist investor is attracted to the space because of the momentum in the gold price, price leadership changes from gold to silver. And we've in fact seen that in 2025. I think the increase in the silver price has been about double the increase in the gold price. This is consistent with prior bull markets. And if the realization and the acceptance of the narrative around gold continues, I would suspect that silver will continue to outpace gold. As to rhodium, I think that has a lot to do with the strength of the economy and the utility that rhodium demonstrates relative to its price. It's a minor metal, and I don't speculate in it. I'm afraid of it. I have been a bull on platinum and palladium because I've seen their price weakness, which I think was due to Russian dishoarding. You know, the Russians have had another need for cash for the last 3 years. And to the fact that investors around the world are forecasting the demise of the internal combustion engine, and hence less need for catalytic converters. I believe that the internal combustion engine will continue to be the primary form of individual transportation in the world for 20 years. And I think as a consequence of that platinum and palladium demand will continue to be relatively good in the face of potential supply disruptions in each of Russia, Zimbabwe, and South Africa. So I'm bullish gold, I'm bullish silver, I'm bullish platinum and palladium, and I can only barely spell rhodium, so I have no opinion.
Every major precious metal cycle eventually reaches a stage where general investors pile in, chasing momentum. Historically, that's when leadership shifts from gold to silver. The current cycle appears to be following the same pattern. In recent years, silver has climbed at nearly twice gold's pace. This acceleration isn't random. It reflects silver's dual identity as a monetary metal and an industrial workhorse. If the gold narrative continues spreading beyond the specialist community, silver's volatility and lower market capitalization could again amplify its gains. Past bull markets show that once silver heats up, it often outpaces everything else.
There will be a point in time when there will be substitution in fabrication. Now, in fairness, with regards to some of silver's uses, specifically as a germicide, so water treatment applications, but also its reflectivity. its utility to the solar industry, it will be hard to replace. It's going to take a very high silver price. What will happen over time with silver is that technologists and fabricators will find ways to utilize silver more efficiently. Its reflective properties are so extraordinary that the utility that silver generates relative to the cost of silver that goes into a solar panel is quite low. But if you had $150 silver, uh, that whole that whole thing changes. You need to find a way to use less silver in the fabrication process, or use a silver alloy or a material that, while it's a little less reflective, is a little cheaper. The same thing would happen with regards to platinum and palladium. At higher platinum and palladium prices, you will find other material. You'll find more efficient ways to utilize platinum and palladium. Either in industrial applications around smokestacks, as an example, or in catalytic converters, as an example. You can fabricate uh, catalytic converters out of nickel. It just takes a hell of a lot of nickel. The catalytic converter is too damn big. But likely, if we saw real price escalations, by real price escalations, I mean a tripling in the platinum and palladium price, what you'll see is much more efficient utilization of platinum and palladium over time as technology accommodates the increased price.
Beyond gold and silver, other metals present a different set of dynamics. Platinum and palladium remain central to catalytic converter manufacturing, and despite a push toward electric vehicles, internal combustion engines aren't disappearing soon. Supply concerns in Russia, South Africa, and Zimbabwe add further upward pressure. Rhodium, however, behaves unpredictably due to its tiny market size, making it difficult to forecast and riskier to trade. As combustion technologies evolve, higher prices across these metals typically force manufacturers to redesign processes, incorporate alloys, or reduce loading, just as industries adapt whenever resource costs spike.
Again, it's a function of the real quote on platinum and palladium. If the platinum price triples, but the price of of a catalytic converter quadruples, it's really a function of the price of the utility that you buy. Your visitors can see me pointing to a logo on my shirt, Battle Bank. There is one Western bank that exists right now, battlebank.com, where we are giving retail investors access to credit collateralized by their gold, silver, platinum, or palladium. This isn't something that's going to happen in 2027 or through 2028. This is something that's going to happen for savers in the United States and Canada at first, but around the world later, with a bank that exists right now. I mean, frankly, J.P. Morgan Chase and Royal Bank of Canada do it right now. They just have $10 million minimums. Uh, Battle Bank has a $100,000 minimum. So the circumstance that you're talking about, by the way, it makes sense in China, given the pardon me, in India, given the cultural affinity that Indian society has for both gold and silver. That cultural affinity is much deeper than the cultural affinity that we have in the United States and Canada for gold and silver. That notwithstanding, there are billions of dollars of gold and silver in private circulation in the United States and Canada, and some holders of gold and silver likely would like to access the capital that they have tied up in gold and silver without having to sell their gold and silver. And Battle Bank exists to do precisely that. The Gujaratis in particular, even the Muslim Gujaratis, the Ismailis, but the Gujaratis, whether they be Hindu or Muslim, are very, very good bankers. And I suspect they didn't need any tips from Rick Rule as to how to access banking products that would service their customers. So congratulations to them for finding a product that will be useful to their customers, much in the way that Battle Bank has found a way to service our own customers in the United States and Canada that didn't previously have access to credit secured by their stacks.
Silver's value in modern technology, especially solar, electronics, and water purification, comes from properties that are extremely difficult to replace. Its reflectivity and conductivity remain unparalleled. However, when precious metals experience sustained price surges, manufacturers respond. Should silver rise to levels like $150 per ounce, efficiencies will follow: thinner coatings, improved recycling, or alloying with other materials. Similar adjustments occur with platinum and palladium whenever prices spike. Markets always innovate under pressure, but genuine substitutes are rare, meaning high prices reshape usage, not eliminate it. This dynamic ensures long-term demand even when costs climb dramatically.
American politics never ceases to amaze me, despite the fact that I am an American. The whole concept that the United States government has decided to invest in mining astonishes me. I don't personally need Mr. Trump to manage my investments. I would prefer that he stayed away from me. I would prefer, too, that the United States organize its economy around market forces. I want as little federal nexus in the mining business, in the commodities business, and in the oil and gas business as is possible. The Arabs say if you allow the nose of the camel in the tent, pretty soon the whole camel is in your tent. It is that way with the U.S. government and any other government. What is positive about it, I think, is that the popular zeitgeist in the United States, the public will, has changed to the extent that the government can do this. 5 years ago, as a mining investor, as a natural resource investor, I was vilified. I sort of expected to see my picture on a post office wall. Now these morons want to subsidize me. Patrick, I have to tell you, I felt cleaner as a human being when they vilified me than I do now as an investor when they subsidize me. But the interest, I guess, of historical natural resource investors like myself is that when the industry is in need of capital, uh, it is to the interest of existing investors to attract dumb money to the sector. And there is no dumber money than the government. So while I think that the intrusion of the government into metals and mining is a net negative for society, it's a net positive for me because they lower the cost of capital in an industry that constantly requires capital.
For decades, only ultra-wealthy clients had access to loans secured by precious metals, typically requiring multi-million-dollar positions. That is beginning to change. Newly formed institutions are now offering regular savers the ability to borrow against gold, silver, platinum, and palladium without liquidating their holdings. This development is particularly meaningful in countries with strong cultural ties to precious metals, such as India, where gold and silver function as both savings vehicles and generational wealth. Allowing individuals to unlock liquidity while retaining ownership marks a significant financial shift, bringing mainstream utility to assets often dismissed as static or obsolete.
I think that's a non-event. The Chinese have always bought most of their silver, and occasionally they've bought silver from elsewhere, China being the largest silver producer in the world. It's important to note, Patrick, that primary silver production, which is to say silver produced from silver mines, is about 20% of total worldwide supply. The rest comes from recycling or as a byproduct from other metals. The Chinese silver production is mostly a consequence of their lead and zinc production, byproduct metal. And I don't think that the decrease in the supply of silver, export supply from silver, will make much of a difference. Certainly not enough to offset investor demand. What will make a difference in silver supply one way or another is paradoxically the copper price. When I was in London, I heard, and I don't know if it's true, I heard that the copper mining industry expects to have to spend $250 billion over the next 10 years replacing copper supplies. If the copper price isn't high enough to incent that, you are going to see copper production fall dramatically. And the consequence of that is that you're going to see byproduct silver fall dramatically. Conversely, if current copper production can be maintained or if it can be increased, I think that you'll see increased byproduct flows in silver. So I think that what investors need to do is pay much more attention to funded investment plans in the copper business and the zinc business, and to a lesser degree in the gold business, in terms of forecasting silver supply. The other thing that could change silver supply dramatically would be the imposition of a sales or excise tax, or the increase, pardon me, in a sales or excise tax in India, which is the largest retail silver market on the planet. To the extent that the Indian government began to disincent silver ownership, then I think that you would see a, a marked decrease in Indian demand. Now, understand, the Indian smuggling community is extremely efficient. And if the tax in India gets too excessive, the supply won't diminish much because the smugglers are ruthlessly efficient. And by the way, you in Singapore, as silver dealers, would benefit immensely. To the extent that there was no excise tax in Singapore, but there was in India, more Indians would choose to buy and hoard their silver in Singapore than in India, and that would be, I would suspect, of distinct benefit to you.
Silver supply is far more complex than many investors realize. Only about 1/5 of global production comes from primary silver mines. The rest is extracted as a byproduct of copper, lead, zinc, and gold operations. This means silver availability is indirectly tied to other markets, especially copper. If copper producers cut spending or face declining profitability, silver output can drop sharply. Government policies also matter. Taxation changes in major consumer nations, particularly India, can reshape global flows overnight. Those smuggling networks often adapt quickly. Understanding silver's supply chain requires watching not just silver mines, but the broader industrial ecosystem powering them.